So we're at a critical level here today. CPI comes out in about 11 minutes. We're inside a high value area, but if we're going to see the shorts crack, we get outside the 6,800. If you look on the S&P, the spiders, the diamonds, right across the board, that is a critical level. And if we get through those highs, now what we could do, we could see a major bump up with the news on CPI and get right back inside of 6,800. I'll look for the short opportunity if that happens. That would be a false breakout. So that's possibly. So let's take a look at the markets right here this morning. I put up our key level today. So if you noticed, I would play the last Wednesday, Thursday, and Friday videos how to trade off these liquidity grab pullbacks, and consequently how to play off low volume nodes in the market. Here's a critical level. If I skinny this down, I look at my bell curve on volume profile. I can see this is the low volume node of the day right there by the control point. So that's going to be our critical level to play off of this morning. So I put that on there. I like seeing when this comes and breaks retest, we get a yellow trigger entry. Really nice off of it. I won't go over in detail because I went over it in detail last Wednesday, Thursday, and Friday, how to trade off these on pullbacks. In other words, this is a buy for me on this liquidity grab right here. I would buy this liquidity grab. Got above the low volume node, and the intra candle came down, and then you can pull yourself in. We went over an entry technique, how you can use a smaller Renko, let's say a 166 or a 177 to pull you in. But I like these pullbacks to these nodes if it happens. If you look at today's price action, let's get in today and yesterday also. If you look at yesterday, 1 o'clock, I mean, this is just your ideal setup in the trade room. When you see you have a yellow trigger entry that comes up automatically on your algorithm, your speakers will go off when that closes, and you see it inside of my 30-year back-tested trend filter, and also consequently inside of my 25 buy zone. That is ultimate confluence. So that was a really nice trade yesterday that pushed the market up. The reason this did not turn a yellow trigger, it's still a buy entry, because you got your reversal candle here. That's your entry after that candle entry there. Your stop can be adjusted below that swing. But that's still an entry, because just because it didn't turn yellow trigger, it'll turn a yellow trigger entry only if it reverses inside of my trend filter. It's more of a shallow retracement for continuation. But that's still a trade because you're inside of my 25 buy zone and the trend filter is green. If you notice, when we're buying and selling these trades, we're on the right side of the market because we're going with our trend filter. Our trend filter is green, we're buying. If the trend filter is red, we're selling. So what we're trying to do, we're trying to buy these liquidity grab areas. On a pullback, we're trying to buy this liquidity grab area. Trying to buy this liquidity grab area. They did the same thing this morning. They'd love to reverse these markets inside of our zone. Another confluence trade. This is a buy setup. Beautiful trade. Just happened this morning. This is our last trade setup this morning. That was a buy setup. So this is how the market likes to pull back, take the rolling position traders out of the market, and they like to do continuation. What they're trying to do, they're trying to grab liquidity to bring it higher. So if you notice the strategy, what we're doing here, we're buying high, selling higher, buying high, selling higher, buying high, selling higher. That's what this market likes to do. Now, the market's in a downtrend with short low, cover lower. The reason traders get in a lot of trouble is that they try to fade the trend, meaning they'll try to short the move up, short the move up. Well, the stochastic is overbought. No, it can stay overbought for days if you're day trading for hours upon hours. Well, it's up against a Fibonacci. No, it can blow right through that Fibonacci. Well, it's a Elliott wave 5 pattern. It can blow right through that Elliott wave. What you have to realize is the market always tries to find the next fair value area. And if you break out a market profile high value area, which we did this morning, this is a beautiful trade. Or actually last night, you broke out of the high value area here. You broke out of the high value. So what the market's going to do is going to try to pull the market back, catch the counter trend traders that are using all these lagging indicators, grab liquidity in the liquidity grab zone. This is a liquidity grab zone. That's what we call them. We call them buy and sell zones, otherwise known as liquidity grab zones. So then they're going to buy, they're going to pull back in liquidity grab zones. That's going to stop all these wrongly positioned traders out because they're trying to fade the market. Then when they grab that liquidity, they're going to bring it right back up. All right, that's what they like to do. Same thing here. Market setting new highs. Right now we're in a new high on the S&P. We're new high on the diamonds, new high on the spiders. So what are they trying to do? They come up to a new high. They pulled all the way back. They grab liquidity in the liquidity grab zone. The knowledge is power, guys, when you're trading these markets. You got to know where the institutional traders are looking to buy. Right there's your liquidity grab zone. They reverse it right out of the zone. Did the same thing yesterday. Caught the rolling position traders, all those that use MAC, the moving average, the max crossing down. Oh, my short-term and long-term moving averages are crossing down. Oh, I hit a Fibonacci. Oh, I hit this and that, and they pull it back and they just get slammed out of the market. Smart money comes down, puts it into the liquidity zone, and they catch the rolling position traders again, and they bring it back up, all with trend. That's what they're doing. Now, look what it's trying to do right now. We're at an all-time high on the S&P. So what are they going to try to do? Spiders are trying to break out. Diamonds are trying to break out right now. They're all trying to break out. You got to keep buying these zones until what? Until they break. Now, if you look at this liquidity grab zone coming up, that's right there. The new zone is right here. It's right on our low volume node. So to me, this is a critical point in the market. And it's a tradable level after the CPI comes out here in 3 minutes. Now, what can happen, and I'm going to leave this up here, this new high, what could happen is the market could break out with the news and just be a false breakout. You could get a false breakout where they just, with the news, CPI comes out, they come up, they run it, and they get right back inside a profile or the high. All we'll do, we'll look for the first pullback, and we'll look to short that market. Just like that. Or same thing with the low volume node sitting right there. So I'm going to leave that low volume node up for you guys. CPI comes out in a couple minutes. We are going to trade. I showed you yesterday how we can trade the opening range after the first 5 minutes. So yesterday, if you noticed, right there is the opening range on the first 5 minutes. Let me show you how this works. So if you take the high and the low of the first 5 minutes, this is a 1 minute candle. 1 minute chart. There's a low, there's a high, right? They broke it out here. They ran it up. They retested in what's called this is called the fair value area for the whole trading day until it gets back inside of it. So the trade was what? The trade, if you're trading off a 5 minute opening range, would be the breakout, the retest, and your entry was right here. You got inside the fair value gap. Right there's your entry, and the market exploded. I showed you yesterday as a 47 3/4 fill for you members that are in the room. 47 3/4 fill. Your stop, if it's wrong, is right below there at 45. 47 3/4 fill, stop below 45, and ran all the way up to 66. Came down to the fair value area gap again. broke it this time, got back inside of it, took off. And then look how the fair value area gap is held true for the entire session. Came down to it around 1145. That's fair value area gaps. I love them. Came right down to it, stopped right in my fair value area gap. The entry was 49, got as high as 75. Your stop was 40, just below 45 on your stop. Okay, so we'll play that at 9:30. I'll show you how we're going to do that also. They are acting positive to the number right now. We're going to let it settle down for 5 minutes, and then we'll get to work. And we'll see if they're going to break through this 68 level that they broke through. This is going to be a key level. And I'll adjust the low volume node after a half hour here because it's only 8:30. All right. So they're reacting positively to news so far, but it's early. So I'll set up some nice trades for us here in a second. If we break back below 6,800, this is a trap, guys. This should be a trap, especially if we get below the low volume node here this morning of 78. So we'll see. If they hold above 68, then they're going to try to keep marking these markets up.